So yeah, thank you for having me. My name is Craig Christianson. I work at the USDA's Risk Management Agency. I work with the dry beans in our office. I'm in the St. Paul Regional Office. Our office covers Wisconsin, Minnesota, and Iowa. And I'm just going to give you a little overview of some crop insurance options for your dry beans. I know I stand between you and lunch, so I'll try to get through this efficiently if it will let me. All right, there we go. So I'll start with just kind of a general overview of the program. If you're ever looking for more info regarding crop insurance policies for dry beans, our website has everything pretty much available. I just wanted to point out a few things. Our actuarial information browser, or AIB, can be found on our homepage under the tools, and this is going to provide basically all the details you need regarding the policy. It looks a little bit like this, not a little bit. It looks exactly like this, and you can see all the info on here. It's going to contain, which types are insurable in your county, prices, yields, rates, important dates, things like that. And I'll be referring to this a little bit later in the slide too in different parts. So here I have the different dry bean types that are insurable in Minnesota by county. This is for 2022. We did not have any changes from 2021, so it should be the same as before. You can see we have dark red kidney, light red kidney, Great Northern, Navy, and Pinto are all insurable in all the counties of Minnesota, and then the others, again, are in select counties, and that, again, you would find that information in that AIB that I just showed you. Another example of info in there is important dates. This map on the left here is a map of our final planting dates. I used irrigated red kidney. And this information is actually found on our RMA map viewer tool, which is also under tools on our homepage. You can see on a map here all the different dates, what it is. It's June 10th, final plant date for all of ours. Also gives you an idea visually of the counties where the program is for each type. So just a little overview of the last 10 years of dry bean, the number of acres insured and the insurance experience. I kind of see the acres, while they've kind of fluctuated, have kind of tended to go up, particularly in the last 4 or 5 years. We've seen that steadily increase. The loss ratio. So a loss ratio, for those who don't know, would be the amount of indemnity or losses paid out divided by the amount of premium money taken in. So of course, 1 is kind of the goal, to have the amount of money going out equaling what's coming in. And you can see here in these last 10 years, we got about 3 years where it's pretty much right at 1. In the rest of the years, it's below 1. So that's great. When you see continued good performance like this, when our actuarial people are calculating rates, it's going to lead to rates going down. So now to get into some options. So I'm going to talk first about insurance units and the options you have for these. I apologize if this is basic for some people, but I just think it's a good refresher, especially since we had a change with our enterprise units, which I'll get into. So for dry beans, you have the option of selecting basic units, optional units, or enterprise units. And you need to make that election on or before the sales closing date. And then that's going to remain in effect from year to year unless you elect to change it in the following year before that sales closing date. So a basic unit consists of all the insurable acreage of the dry beans in the county in which you have 100% of the share or are farming it on a share basis. So an example to illustrate this is if you have land and you own some land and you're renting land from 5 different landlords. 3 of those rental agreements are on a crop share basis and 2 are on a cash lease basis. So in this case, you'd be entitled to 4 basic units. You're going to have 1 for each of the crop share arrangements because they're with you and a different individual. And then 1 that would combine the 2 cash leases and the land you own, because that's going to be 100% share. One advantage to the basic unit is that there is a premium discount that applies. And that discount's going to be based on the number of planted acres. Next, we have optional units. So this is land that would be considered a basic unit, but now it can be broken down into smaller based on the criteria below. So it could be, you can break it out by section, by irrigation or organic practice, or for dry beans by bean type. So that they can be broken down using more than one of these criteria. So you could have optional units by section, and within that section by type. And then third is our enterprise unit. In this, it's going to be all of your insurable acreage of that crop that's in the county. So because the risk is kind of spread across your different units, there is a discount, like basic units, that's applied to the premium, also based on the number of insured planted acres. New for 2022, and this is kind of why I want to get into this insurance unit discussion overall, is that you may now elect separate enterprise units by irrigation practice or by type. So for example, if you have 3 different types dry beans, you can elect a separate enterprise unit for each of the types. You can elect one for one type and then do basic or optional for the other 2, or enterprise unit for 2 and optional for the other one. Any combination, but you can decide by type what you want to do. If you do have irrigated, non-irrigated, though, you would have to choose if you wanted to elect these by type or by practice. You can't do both. So kind of to sum up what I just talked about there, so to qualify for these, again, it's going to be all the insurable acreage in the county. And then, again, you can elect one enterprise unit for irrigated, one for non-irrigated, or you can elect one for each type. If you do elect enterprise units for one of your types, you do have to meet some requirements to qualify for an enterprise unit. Those requirements would be that you have to have land that's basically located in at least 2 or more sections. And the criteria to qualify for each section would be this 20 acres, 20%. So for each section that you're using to qualify for an enterprise unit, you have to have at least 20 acres or 20% of the insured crop acreage. If you can combine sections, aggregate them to meet this qualification. And I just have kind of a simple example to hopefully make it a little more clear in case that wasn't. Say you're farming in 3 sections, 15, 34, and 35. You have 80 acres in section 15. 10 acres in each of your sections 34 and 35, so a total of 100 acres. So 20% is 20, so kind of cheated there. It's kind of going to be the same. So section 15 is going to qualify because that is 80 acres. It meets that minimum threshold of 20 acres in this situation. But section 34 and 35 do not. These 2 sections can be combined. They would equal 20 acres, and then combining those would qualify for the enterprise units because you'd meet that 20 acre threshold. If it turns out that you've elected the enterprise units and it turns out you don't qualify, you don't meet these 2020 requirements, that would you'd revert back then to a basic unit or an optional unit. So if it's discovered that you didn't qualify after the acreage reporting date, it would automatically become a basic unit. If it's before the acreage reporting date, you would have the option to choose between a basic unit or an optional unit, assuming you qualify for the optional units. Okay, so then we have some options and endorsements for the policy that I wanted to just briefly go over. We have the supplemental coverage option, or SCO, the enhanced coverage option, ECO, and then yield exclusion. And I'm also going to talk about master yields after these. So the supplemental coverage option, or SCO, is it's an area-based coverage. It's intended to cover a portion of your insurance policy deductible. So basically, an SCO payment occurs when the county average revenue or yield falls below 86% of its expected value. And I say revenue or yield because it's going to depend on what type of policy you have. If you have revenue protection, it'd be based on the revenue. And if it's yield protection, it would be based on yield. In order to get the full payment for this SEO, it would need to fall below, obviously below 86%, but then to your coverage level. So if your coverage level is at 75%, then if that actual yield was 75% or below, you would get that full coverage. Otherwise, it's going to be in between your coverage level and that 86%. And then in order to elect this, you would need to do that by the sales closing date. Some other things to note is that because it's an area-based policy and it's not based on your individual experience, these SEO indemnities, they're not going to be affected by whether you receive a payment from your underlying policy. So it is possible for you to experience an individual loss, but not to receive an SEO payment, or vice versa. If you have elected to participate in the Agricultural Risk Coverage or ARC program through FSA, you're not eligible to participate in the SEO. This is a continuous endorsement. So unless it's canceled on or before the cancellation date, it's going to carry over year to year. Another thing to note regarding this is that all planted acreage of the crop in the county, that's insured by the underlying policy, also needs to be insured under the SEO. So you need to insure all the acreage that you have on your policy under this as well, if you choose to elect it. Next is the enhanced coverage option, ECO, and this is really very similar to the SEO. It's just at a higher level. It triggers at the 90 or 95% level. So then in this case, it's going to pay out that full amount when the county revenue or yield falls to 86%, because at that point it cuts off, and then it would be covered by SEO or ARC. This again, elected by sales closing date. Again, it's an area-based plan, just like the SEO. So all the caveats that I mentioned previously would count here. The one difference, though, is that election of ARC does not impact your eligibility for ECO because it's not covering the same thing. So I just put a little visual down here that kind of shows, what these do, what these are covering. So if you have a 75% policy, SEO is going to cover you from 86 to 75, and then the ECO would be 90 or 95 down to the 86. I did want to mention too that we do have fact sheets on our website. It's going to be under, let's see, I can show you here, under topics on the banner on the top of our page. We have national fact sheets. So if you remember me talking about this, but don't remember everything I said, I don't blame you. But you can always go to our site and find these fact sheets that'll give you this information. So next I want to talk about yield exclusion. This is for crop years where an actual yield in the county, the average yield is going to be below 50% of the simple average for the past 10 years. So in cases like this, it would create an eligible yield exclusion year. And again, this is an option that you would need to elect by sales closing date. So when this occurs in a county, any counties bordering it, so the contiguous counties, are also going to be eligible for yield exclusion in that year. One thing to note, though, if you elect yield exclusion and apply it, and it increases your guarantee because you're taking out you could be taking out a low yield, that any increase in that guarantee would be reflected in the premium rate. So it could lead to a higher premium because you have higher coverage levels. This is just a map showing, this is also from our map viewer tool, showing the different counties which have years that are eligible for this yield exclusion. You can see it looks like, I think it's Clearwater County there in yellow, means there's 5 to 7 years that qualified for yield exclusion. We have a bunch in green with the 2 to 4 years, and then some blue where it's 1 year. So again, it could have occurred in that county or in the county next to it, making it eligible. Down below on the bottom here, this is our AIB again. This is where you're going to find out what years, if any, are eligible for yield exclusion. So in this example, we've got Sibley, Minnesota, and we can see that 2015 and 1997, both eligible for yield exclusion. So in 2015, that P means the county actually saw that low yield. The 1997, that C there just means it was a bordering county. Not that that's super important, but so, and then on top here, I just did a kind of a real basic example to show how this works and illustrate, what effect it can have. So on the left, I have, just a simple basic APH database. You can see before the yield exclusion, so in 2015, they had a pretty low yield there at 357. And I made all these numbers up, so hopefully they make sense. So their average yield and their approved yield is going to be based on that 5-year average. So it's at, 1,999. Now applying the yield exclusion, and you have the option to apply it or not. If you've elected it, doesn't necessarily mean you have to. If you're one of the lucky ones to have a good year, but in this case, obviously it's low, so they're going to use that yield exclusion, and we're going to exclude 2015. So now the approved yield is going to be based on the 4 years instead of the 5, taking out 2015, and you can see that approved yield went up to 2,409. Master yields are also something that are available for dry bean producers in Minnesota. We started that in 2021. And what these are for crops where, crop rotation and land leasing practices limit the number of years where you can actually build experience within your APH databases within these individual units. And so if you're interested in master yield, instead of sales closing date, this deadline is actually, your request would be due 30 calendar days after the production reporting date, which for us is April 29th. And so in order to establish an approved APH master yield, it's going to take data from all the acreage of the crop that you have or had in the county, identified by unit and by practice type. And then that approved master yield is going to apply to all of the individual units within your master yield there. So within the county that you're farming in. The same policy, you can't have master yields for some and then a standard APH for others. So if you elect master yield, it's going to apply to all of the land, all of your databases that you're farming. And I'm going to go through kind of a basic example at the end here of this. So you can kind of see how it works if you're not familiar with it. But one thing I want to stress that I think gets confusing with doing these master yields and doing these calculations is that they're based on an operator. So it's an operator basis. And what we mean by operator, at least by our definition as applicable to master yields, is going to be the individual with the largest insurable interest in the crop. So you're going to take all the data from all the entities where you're considered the operator, and that's going to be combined to complete your master yield database. So if you're an operator that has a majority share in multiple policies, again, you can't choose to insure some policies under master yield and some under standard. It all needs to be consistent. So what you'll need to establish a master yield is going to be at least 4 years of APH crop years of continuous production reports. So it's a minimum of 4 years, and you need to produce those. It's going to combine all of your certified APH history. So you need that. And then you're going to need to complete and sign a production report for each unit for the most recent crop year. So that acreage and production does need to be reported separately by practice and type. And then here's just kind of an example of how this works. Again, another kind of basic example. Producers got 3 units in this case. So you can see they got, 2018 through 2021. Not every unit has production each year. And so to complete the master yield database, you're going to combine all these units into one. So you can see for 2018, we have acreage and production in unit 1 and unit 3. So those acres in production are summed up, put into the master yield database here. So 2018 is going to look like this. And then the next year, we only have production in that one unit. We have unit 2. So that unit, that's going to carry forward to your master yield database. And we can see it's in there now for 19. And then so forth for all of the years. So when we complete this database, then it's going to be, I guess, a weighted average for each year because we're taking all the acreage and all the production. And then the yield here then is going to be your approved yield is going to be based on each year's, and it's going to be the simple average of all these. And that is all I have. If there's any questions, otherwise, if you have questions or want to know more, again, website's a great place, but if you want to reach out to us, you can email us at rsomn@usda.gov. That goes to our office inbox, and I usually prefer people do that. I'm happy to take the questions, and I'll probably end up getting them. But that way, if I'm out of the office or on vacation or gone, we can get somebody to respond and get back to you. So thank you for your time. Appreciate it. Hopefully next year I can be there with you in person.